today's video, though, we're going to focus on one of the most anticipated events, certainly in the financial world, but I do think customers were very aware of this month's RBA decision. Lots of speculation going into the meeting last Tuesday, where they did decide to cut the cash rate down to that 0.1%. So what does that mean for Aussie homeowners? And is now the right time to really be thinking about fixed rates, given some of the banks have come out with some pretty sharp fixed rates in the last few days? To make that decision and to give you guys as much advice as possible, we've got the Lendi co-founder and CEO, Dave Hyman, back with us. Welcome back, Dave.
Thanks, Zara. Great to be here.
Well, let's jump right into it, Dave. So the RBA last Tuesday at 2:30 came out and told us that we were now going to have another historic low cash rate, this time of 0.1%. They fell short of going all the way to that negative interest rate that was discussed, but what's the main reason they made this decision at this time, and what does that really mean for Aussie homeowners?
So we've obviously, in a lot of the updates, we've spoken about the state of the economy, and we went through in March and April time talking about the impact of COVID and the impact on the property market. A lot of those things that still exist beneath the surface. Yes, Melbourne's opening back up and the rest of the country's operating, but we've still got elevated unemployment rates, and we're still in a technical recession. And so the tool that the Reserve Bank uses to try and stimulate economic activity is interest rates. And so the dropping of the interest rate was really just sort of drive that activity. What it means for Aussie homeowners, obviously 0.1%, it's obviously it's pretty much as low as you can go. And what that means for Aussie homeowners is a couple of things. So I think firstly, looking at the property market, interest rates are a big driver around demand for housing. And one of the things that's really been really interesting to watch through this period, we obviously saw property transactions fall off a cliff in March, April, and May as the COVID period was sort of starting to take impact on Australia. And we've seen a pretty sharp recovery. I mean, I think most commentators were calling it a V-shaped recovery, and that's certainly played through. And when you look at the clearance rates and you look at the volumes of sales and where pricing is, given what's happening in the economy, really the biggest thing to point to around why there's been strong support there is interest rates. So what it means for Aussie homeowners, I think if you're a homeowner and you're not looking to sell, well, I think you can rest easy. I think about the price of property. I think the calls of 10, 15, 20% price drops early this year clearly haven't played out and are much less likely to play out given interest rates at this level. And then if you're a mortgage holder, or you're looking to buy a property, the difference, could mean thousands more dollars in your pocket. So if we look at the most recent 15 basis point cut, combined with the cuts over the last 18 months, that could save us, the average Australian homeowner, an incremental $3,400 just over a 12-month period. And that's a pretty meaningful change. In addition to that, we've also seen support from the Reserve Bank to banks. There's a thing called the Term Funding Facility, and this is a really cheap wholesale funding facility for all of the banks. And for that reason, we've also seen incremental drops in pricing, in addition to what the RBA has done. So great news for homeowners, great news for people with mortgages, great news for people who are looking to purchase a property. It's just become all that much easier.
Yeah, it's great to actually share some positive news and positive impacts on what has been, let's call it, a difficult year on the whole for most people. But as I said before, there was a lot of speculation leading into this one about whether or not they would actually go all the way to zero. And I think there is still a little bit of a question mark there. What are your thoughts on another rate cut? And do you think we'll ever see zero cash rate, as we've seen in sort of Switzerland, Denmark, Japan, and others?
Yeah, look, as you pointed out there's a few countries where we have seen this. And I think, if you speak to economists, it's a pretty divisive topic. I think my opinion personally is, while it would be really nice to get paid to have a mortgage, I'd certainly take that up. There's a bunch of structural reasons why moving beyond zero and going into negatives would be difficult in a market like Australia. So I don't think we're likely to see it. If you sort of read into some of the comments by the RBA governor after the Melbourne Cup rate cut, he sort of talked about rates being at these sorts of levels for the next few years at least. So because of all of those reasons, it's highly unlikely, I think, we'll see interest rates go beyond zero into negative territory.
So when the last rate cut happened way back in March, that feels like 3.5 years ago today, but it was just in March time. There was an influx of banks that passed on the rates, but the sharpest rates were to fix. So to go on to a fixed rate. We had a lot of questions come from customers on the platform at the time, and I think we briefly covered it in one of our earlier monthly updates. But what's your opinion on a fixed rate for those customers who are maybe used to being on a variable? What are the kind of pros and cons that you see so that customers can kind of weigh up whether it's worth fixing for a period of time?
Yeah, so as you say, there's plenty of pros and cons to fixed rates. I mean, starting as a starting point, a fixed rate is a rate which you determine over a period of time and it doesn't move. So, for example, you could choose a 3-year fixed rate, and today fixed rates are the lowest they've ever been there. Some of the banks, following the interest rate cut the other day, came out with 1.99% fixed rates for 3 and 4 years. So what that means is for that whole period, your rate doesn't move up and it also doesn't move down. So the benefit is you get a lot of certainty. In a falling interest rate market, sometimes the drawback is you could be on a rate and the interest rate falls faster than the time period you have on your fixed rate. But if you think about some of the things that I said before, particularly with relation to the cap rate being down at 0.1%, it's highly unlikely we see big movements from here, and we still see a pretty big gap between fixed and variable. The variable rates we're seeing in market at the moment are sort of at the bottom end of the market, sort of 2.2 to 2.5%. So you're paying a premium to have that variable rate. And where those drawbacks typically exist, based on where we're at in the interest rate cycle, it's definitely a great time to consider fixing at the moment.
That's really great advice, Dave. And if anyone does have any specific questions about what a fixed rate entails and how to switch to it, please just jump on Lendy. We've got a number of articles, blogs, and equally, if you want to speak to one of our home loan specialists, you just need to click that Speak to an Expert button there on the top right-hand corner of our homepage. But finally, Dave, one last question. For those of us who do have a mortgage and we have not heard from our bank, what should we be doing?
Yeah, I think the RBA governor actually said this perfectly himself. If your bank hasn't passed on the rate cut, you should look at switching banks. We've never seen such a competitive environment in the market, both from the offers that are out there to the rates of those offers. As I mentioned before, 1.99% for a 3 and 4 year fixed rate is just unheard of in the Australian market. So if your bank hasn't passed the cut on, look at switching. Again, as Zara said, use Lendy. We can help you work with your existing bank or lender or look at other banks and lenders. There's never been a better time, so it's definitely worth taking the action.
Thanks so much, Dave. Again, really sage advice, and really important that everyone has as much information about this RBA cut as possible. As we've said a few times on this, though, there is a lot out there. There's a lot of information, and it can sometimes feel a little bit like information overload and not knowing which way to go next. If you do have any questions about your home loan, I remind you all that Lendy is a free service. Do jump on our platform. Or if you're already on YouTube, we do have a lot of videos that cover these topics in a lot more detail. So again, click the bell at the bottom to subscribe to some of those videos, or just jump onto our Lendy page on YouTube and you'll be able to sift through them there. Thanks very much again for joining us. Dave, thanks so much for joining us out there. We hope you all have a really great rest of November, and we'll see you back here for December.